Welcome back, traders. In this video, we are diving into a strategy that many consider, one of the reliable combinations in Forex trading, and that is going to be RSI Divergence, meeting the Bollinger Band Squeeze. All right, it's also known as the golden pair of trading combo. So we're going to be adding our RSI to the chart, and we're also going to be adding our we're also going to be adding our Bollinger, right, or Bollinger bands. Okay, so let us break it down piece by piece. All right, first of all, the RSI divergence. Okay, the relative strength index is a momentum oscillator, and divergence occurs when the price is moving in one direction while the RSI is moving in another direction. Okay, for example, price might make a higher high. Price might make a higher high, but the RSI shows a lower high. So that is called a bearish divergence. And it signals weakening momentum. The opposite, whereby price makes lower lows. Price makes lower lows. Let me move forward. The RSI is still loading. Please pardon my network. Okay, so in a situation whereby we have price giving us lower lows, that's going to be a bearish trend, right? So you have a lower low, and then the RSI gives you a higher low. That's going to be a bullish divergence, signaling that the bulls, the strength of the bulls, is returning. All right, divergence is important because it highlights that what the price is showing on the chart does not align with actual momentum, and that is often a clue that a reversal or at least a pullback could be on the horizon. Okay, so we have our RSI here, and pardon me, sorry for the network interruption. So I have ensured that the indicators are properly loaded right now. Okay, now I was explaining divergence, right? If you have lower highs, if you have higher highs, sorry, because it's a bullish trend. If you have higher highs with price and you have lower highs with the RSI, it shows bearish divergence, and it has to be in an uptrend. Okay, that shows that a bearish reversal is about to happen. Then if you are in a downtrend, okay, if you are in a downtrend and you have lower lows, I'm looking for a good example. If you're in a downtrend and you have lower lows with price, but then you have higher lows with the RSI, it's a bullish divergence. Okay, in that case, it's a bullish divergence. For example, you can see what we had here. Lower low, right? But higher low, bullish divergence. And eventually you can see that the price went up. Now let us move to the second piece of the puzzle, which is the Bollinger bands. Okay, the Bollinger Band Squeeze, to be precise. So Bollinger bands measure volatility. All right, when the bands contract and squeeze, together, when it's squeezed tightly together, it means the market is in a low volatility phase. Okay? So what typically follows periods of low volatility is an expansion, which is a breakout in one direction. So when we see a squeeze, we know that the market is preparing to make a strong move. On their own, both tools are powerful, right? But when we combine them together, that's where we get the golden pair. Here is how it works. We wait for a Bollinger Squeeze, okay? Wait for a Bollinger Squeeze to show us that the market is cooling up, or rather coiling up, ready for a move. Then we look for RSI Divergence, within or just before that squeeze. If price is pushing in one direction during the squeeze, but RSI is showing divergence, like you can see what's happening here, that tells us that the breakout is more likely to happen in the opposite direction. This is where traders find high quality setups, right? So for example, imagine the market is consolidating and the Bollinger Bands, are getting tight. Price pushes to a new high within that consolidation, but the RSI does not confirm it, like what happened here, right? It shows bearish divergence. That's a powerful signal that when the bands expand, the move could break downward instead of continuing higher. Yeah, and you can see that eventually although the movement is kind of sluggish, but eventually we started having gradually a bearish move, right? It's very sluggish though, but it's still a bearish move that is taking place, right? Okay, so by combining momentum analysis with volatility compression, we are filtering out false signals and waiting for the markets to give us clear confirmation. This strategy works across different pairs and time frames, but many traders like to use it on the 1 hour or the 4-hour charts where signals are stronger. The key is patience, okay? Waiting for both conditions to align before pulling the trigger. So that is the golden pair, RSI Divergence meets Bollinger Band Squeeze, okay? Together, they make an excellent combo for spotting clean sniper entries without relying on guesswork. If you enjoyed this breakdown, make sure you hit the like button and subscribe to the channel for more Forex trading strategies just like this one. Your support helps keep this content coming. And I'll see you in the next video. Happy trading.